Actual cost for administrative, actual cost for advertising. Seller does not currently pay a third-party property management fee. A 4% management fee was included in our analysis. Property maintenance based on actual costs. Okay, taxes at current assessed value, current insurance rate, utility expense based on actual costs. Okay, and 300 per unit in capital reserves. Okay, so it's a little light for the capital reserves, but that's fine. So vacancy loss 8%. This is only a T2, which is not good. We need to extrapolate this for T12. T2, but it's forecast for the annualized rate, it looks like. All right, let's see. Personnel 30, administrative 2604, advertising 1,800. Maintenance management 4%. They included maintenance, property taxes, insurance, utilities. Then capital reserves gives you a net. Okay. Market overview. I'm not really too worried about that. Okay. So this OM is okay. Now you included two spreadsheets in the email. You have Ashwood Courts Management, and then you have another one. Let's see here. What is this one?
Oh, this is one is T12, the other one is the underwriting one from the RAI underwriting team.
Okay, so this one, Ashwood Courts Management. Let's see. This looks like it might be the 2024-2025 income. And okay, so market rent, rent amount, vacant, 925. Do we have lease inception dates? Tenant contact. We don't have lease inception dates on here. Okay. Okay. So if we're looking at this spreadsheet, we have the 2-bedroom, 1-bathroom. He's estimating market rent now at 900, and the 1-bedroom, 1-bath at 800. So he went up from his original offering memorandum. He went up by like $50 for each one.
Yeah.
Which is okay. Because if he's actually collecting the rent, then that's fine. And it looks like on some of the units, he is collecting the 900. So we know that the market will bear that, right? So that's good.
Exactly.
And that's why I wanted to know what the lease inception date. So this one looks like some of these look like they were in January and February is when they started the lease. So that's good. Okay. All right. Let me just go through this real quick and see if any of them are like really low, which would be helpful. So this one's at 675. The market is at 800. So that's definitely one opportunity. You have some that are actually even higher than market. So that's good. Let's see, when was this one leased? In January. Okay, so he's getting a little bit more. Maybe those are the ones that were renovated.
Yeah.
Okay, vacant, which is okay. And then we have some that are 750. Okay, so nothing stands out crazy over there. Let's look at the expenses. Property tax, so monthly total, let's see, insurance, water, utility, electric, management, waste, pest control, gas. Okay, gas looks a little low. So his gas bill is only like 200 and some odd dollars every month. Oh, here, this one is 600. Okay. I have to go through these carefully. So Lubbock water. Okay. So January, where's the gas bill here? So this one's $1,900, $1,300, $600. This one's only $295. So October, November of 2024, his gas bill was only like $250 on average. And then December it went to 611. In January it went to 1,300, and then February it went to 1,900. So I'd be curious why there's such a huge discrepancy on that. Everything else looks like it's fairly kind of good.
Yeah, I guess when we get into a contract, if we get into a contract, we can do much more deep down on the due diligence part, right? We can ask all those information.
Yeah, yes, we can, but these are just things like I'm just talking out loud to myself to like,
Yeah.
kind of get an
Makes sense.
idea of like what,
And I mean, it definitely,
yeah.
definitely makes sense. So, yeah.
Okay, so let's talk about he's on the one on the pro forma here. They have a few things that they've listed as what you could do for value add. So one is rubs, increase rent, add vending machine. They only have one right now. Solar for electric, and then protest the property tax. So okay. Aside from the solar for electric and the vending machine, I think the other things are fairly common.
Mhm.
So let's if you don't mind, I'd like to take a step back before I look at the actual like evaluation that you did. Uh what what is the guy's reason for selling? Why is he trying to sell this property now, and how long has he owned it for?
So I believe, if I remember correctly, I think he owned it for like about 3 years or so. And he owns different multi-families as well as some gas stations and stuff too. So he's getting his money stuck over here, and he wanted to buy a gas station or something that he wanted to invest in. So that's why he's selling this property to invest in those in that sector.
Okay. Let's see. So let's see if I can pull up the mortgage information on this estimated property. So here's another site that I like to use. And this one's called PropWire. I like to look at PropWire to see um what the mortgage information is and that sort of stuff. A lot of times PropWire will have it. It
So
doesn't.
what's the site name? Hotwire?
PropWire, PROPWIRE. So this guy owns a bunch of houses, it looks like. And land. He's got a pretty good portfolio, but these are some commercial properties. Um, okay, so property itself. He's got a 2.4 million mortgage balance, it looks like. Hmm. Is that right? Why is it? Go back. It's not letting me do this. Let's see. Hold on. Um,
No, you eat. You eat. Papa is full. Mm.
it's not- hmm. Very strange history. Let's see. Listing, transaction time. It looks like it's been selling like every 3 or 4 years,
Mm-hmm.
which is not. Estimated mortgage property value, cash buyers, generic. All right, I'd have to do a little bit of digging. It says that his mortgage balance is like 2.4, $2.5 million, which if he's trying to sell for 2.6, is this direct from owner or is this listed by a broker?
I mean, it is listed on LoopNet now, but I started conversation like I was explaining before it got listed. So I'm talking to the owner directly.
Okay, so it was on LoopNet or it was direct
Off market.
it was off market
Yeah,
and
it was off
now,
market. Now
yeah.
it's on LoopNet because yeah, I made him an offer. He said he would be able to get more, so he listed it. And now, I mean, I guess he did some calculation. Whatever offer he received didn't make sense to him. So he came back to me and he said like if I can offer him 2.6 with covering closing costs, he'd
Right.
be willing to move forward with it.
Yeah. So gross potential rent currently is 456, estimating at 580. That's a big difference. So in the spreadsheet, we're estimating the post renovation per unit is 900 and 1,000. Oof. Okay. 5,000 unit renovations, exterior 45,000. So you have like a $300,000 capex budget. Okay. Other income 12,000. Loss to lease. Okay. You don't have in the post reno, you don't have any rubs in there. 44. What is this? Utilities 240. So 8.29 cap with 2.9 million. Okay. So just going through this, you're estimating that after you renovate all of the units, you're going to get 900 for the 1 bedroom, 1 bathroom, and 1,000 for the 2 bedroom, 1 bathroom.
Mm-hmm.
Maybe. I don't think it's too unreasonable, but it's gonna take some time to get there.
Yeah.
So with just the current situation, you have, $456,000 in income. There's $12,000 in additional. Is that the laundry is $12,000? The additional income?
Yes. Yeah,
Okay.
I believe it's like about 600 or 800 that is quoting a month for laundry and stuff. So
Okay. Okay. So post reno, where did this number come from? Post pro forma 019. Where's 019? Okay, total annual. Okay, I got it. Okay, so the potential is if it's 800 and 900, and then the post reno is if it's 900 and 1,000. Okay, I got it.
mm-hmm.
In the pro forma or in the spreadsheet, you don't have any rubs included in here. Did the guy
Yeah,
say? Did the guy say whether it's something that would be possible to do? Meaning, is the tenant base in that area going to be able to support paying on top of the $800 or $900 rent? Will they also pay the fees? Because
yeah, yeah. I'm not sure about that part. I would have to check on.
okay, because that's going to be important. Because if
But
we're
in my
saying
mind, I was thinking to do that. But yeah, I mean, you make a valid point whether the area and that's the norm or not. Yeah, would have to check on that.
yeah, because so normally what happens is if they're paying $1,000 rent for a 2 bedroom, 1 bathroom for that area, they may not pay $1,000 if they also have to pay the utilities, right? So
Yeah.
a tenant may only be willing to pay, let's say, 850, and then on
Mm-hmm.
top of that, they'll pay you, the 150 for the rubs, but they may not be willing to pay you 1,000 plus 150 for the rubs. So we have to do a
Yeah.
little bit of
Yeah.
digging there to see
Digging on there.
whether
Yeah.
you can even
See.
rub anything back, because ultimately it's the total number that matters, right? Whether you just say, okay, it's $1,000, everything, all bills paid, or whether you say it's 850 plus rubs and then it comes out to $1,000. Either way, it's the same thing.
Yeah.
So for
Yeah.
us, we just need to make sure that we can do what they're saying the rent will be, and then that you can also add the rubs on top of that. So there's a
Mm-hmm.
question mark there for sure, right?
Mm-hmm. Yeah.
Um, I see that the insurance, the taxes, utilities, management expenses, marketing, you increased it. Okay. General and admin, you increased. That's good. Repairs and maintenance. I think that's a little light, but okay. Well, maybe not because you don't have anything in turnover. Okay. So turnover and R&M, what is the total of these two? So that's 35. Okay. That's fine. Contract services and replacement reserves. Okay. There's no rent abatement. So with that, you end up with this. The numbers are all the same. So You have a 60% expense ratio here.